The president signing that executive order to ban housing investors before heading to Davos, where Trump had promised to announce more housing affordability initiatives. His speech this morning hinted at the opposite, though. Let's bring in Diana Olick. Diana, what did he say? I missed it.
Well, Kelly, President Trump's executive order is designed to ban large-scale investors like Invitation Homes, American Homes for Rent, Blackstone, and Pretium from purchasing more single-family homes. But he exempted investors in the build-to-rent market. And that's a big relief for builders like Lennar and Taylor Morrison, who sell to investors. American Homes for Rent is also a major build-to-rent player, actually a top 40 home builder. Analysts say the ban could definitely help in markets like in Nashville and Atlanta, where investors make up a very large share. But nationally, big institutionals only own 1% of the rental stock. The president also, though, said in his speech this morning that he did not want to bring down home prices.
Every time you make it more and more and more affordable for somebody to buy a house cheaply, you're actually hurting the value of those houses, obviously, because the one thing works in tandem with the other. And I don't want to do anything that's going to hurt the value of people that own a house.
So it seems kind of counterintuitive, but what I think he's saying is he wants to lower mortgage rates, and he wants to have less competition in the market to make it easier for buyers. But we, of course, got some rough numbers this morning. That is a huge drop in December pending home sales, down 9% month to month, even as interest rates kind of just sat around on the low side. The realtors said that put a damper on this whole year's housing outlook.
Yeah,
Kelly?
the number was really bad, and like many, I thought, okay, well, in the margin, rates were in a downward, trajectory. I mean, maybe it wasn't the sub 6% moment yet, but still.
Yeah, I mean, they were sitting right around 6.25% in December. Remember, these pendings are based on signed contracts, so it's people out shopping during the month. They're seeing that mortgage rate, which really did not move at all, and they are seasonally adjusted, so I know it's the slow time of the year. Still, I think it had more to do with just general affordability, the fact that while rates sat around 6.25, they're still higher than they were last summer. And also, it's this general uncertainty in the economy. We've talked to, our housing market survey, our quarterly survey of realtors was saying people are just nervous about the economy and sitting on the sidelines.